Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, April 17th, 5:50 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. State of the market, we are in the midst of a short-term and medium-term pullback. You check the trend gauge in the upper right of the screen. We've got the red arrow on market leadership as well. It's dwindled, to put it mildly. I created a 21 over 21 list yesterday, and we're going to review that again. 17 of the 21 down today. That's not a good sign when leaders are not outperforming. Short term, we're on the bearish arrow there, as well as all five of the major indexes are trending below their 21-day moving average, and the slope of the line has rolled over significantly now. Medium term, looking at the 50-day moving average, we've got the Dow, small caps and mid caps, all below their 50-day moving average with a negative slope. And the NASDAQ 100 is below. The slope of that line has flattened out. The S&P 500 also below, but that is still climbing higher. The 50-day moving average still climbing higher by about 2 points a day. So we've got neutral there. It's really neutral with the red sub arrow closer to bearish. Long term, and remember, the market never gets into significant trouble. And when I'm saying significant trouble, I'm talking bear market. Doesn't happen unless we break the 200-day moving average, and all five of the major indexes are still above that level. So what happened today? I mentioned in last night's video that we were oversold on short term, and it may be time for a bounce. And we got that bounce at the open, and it lasted for less than 30 minutes before we rolled over. Had a 3.5 hour, just lower lows, lower highs, straight trend down, frozen rope to the downside. It's called a frozen slope to the downside, as if you're Eddie the Eagle Edwards going down the slope before you take off and fly, but there's no takeoff. He just kept getting lower. And leaders weak as well. I added the 21 over 21 stats on here. That composite was down 1.45% on the day. The big seven gapped up 0.4%, closed down 1.07%, led to the downside by NVIDIA, down 3.87%. The RG8 down 1.08%. S&P 500, I said gapped up before. It was the S&P 500 that gapped up 0.4 and ended up down 0.58%. Equal weight down 0.21. Lighter because there's a bunch of banks that are a factor into this RSP, and banks were positive for the most part today. So that's what cushioned the equal weight S&P 500. NASDAQ 100 down 1.2% after gapping up 0.35. Disappointing there. Equal weight NASDAQ 100 down 1%. Dow down 0.2. Mid caps down 0.83. Russell 2000 down 1%. Global 60/40 was the place to hide today, really, in bonds, because prices were up as yields pulled back a bit. Global 60/40 down 0.09%. In-house GROTECTION down 0.42%. We'll talk about a couple portfolio changes when we get to the tail of the tape. Let's get first into the indexes and our inter-asset correlation charts. And you can see the S&P 500 here making a lower low, bouncing right above that 5,000 level. Here's a 5-minute chart. You can see the gap up, stayed sideways for less than a half an hour, and then down, frozen slope to the downside, 3.5 hours, a little bit of a bounce. Attempted breakout here. Some algos fired and pushed us higher, but that petered out and immediately resumed to the downside. A little bit of a base into the close, right above that 50-20 level. So that 50-40 level, which was support yesterday, gave way, acted a little bit as resistance as we were trying to get higher before that failed break higher late afternoon back to the downside. So this is a hallmark of weak market, strong open, weak close. Very similar to what we saw on Monday with the big gap up and nasty failure to the downside. This one not quite as vicious, but disappointing nonetheless. I kind of had an expectation that maybe with that gap up, we might challenge up to the 50-day moving average and we'd see what would happen there. the market had other plans. And if the market has other plans, you best change your plans. So here's the NASDAQ 100 also making a lower low. I've added a purple line on here. That's the 100-day moving average. Now less than 1% away from the 100-day moving average is the NASDAQ 100. Let's go back to the S&P very quickly. You can see we're halfway between the 50-day moving average and the 100-day moving average there. 1.9% below one, 1.9% above the other. Let's go to the Dow. Dow has actually broken its 100-day moving average below that 38,000 level, but showing relative strength. Not a surprise that it's showing relative strength, as it is a more defensive index. Let's look at the mid cap. S&P 400, still above the 100-day moving average, firmly below the 50. That actually, slope of that line actually has not quite rolled over yet. And the Russell 2000, below its 100-day moving average, flat on the slope of that line, the 50-day moving average, coming up closer now, just 1.9% away from its 200-day moving average. Those are the 5 major indexes. The VIX today, tighter range versus normal, down 1%. Let's show equal weighted index very quickly. Here's the equal weight S&P, and it's sitting right on the 100-day moving average, as equal weight has been weaker than the market cap weighted S&P. And we'll show QQEW also. That has broken the 100-day moving average. So weaker than the market cap weighted NASDAQ 100. So where were we? How about the dollar? Strong dollar has been a problem. Dollar pulled back today by 1/3%. How did that impact precious metals? Well, a little bit of bifurcation here between gold and silver. Gold down 0.74%. SLV slightly positive, up 0.19%, but closing near the lows of the range. GDX closed mid-range, up 1.5%. Bitcoin, I got to start showing IBIT, not BITO. Breaking the 50-day moving average today, continues to pull back as everybody was all frothy about the halving or halvening. I've heard it called both. I don't know what's right, but it doesn't matter. What does matter is that price is weak and we're out of this asset class. As it broke the 21 and the slope of the line rolled over, and now we're below the 50-day moving average as well. On to bonds, prices up today, meaning yields pulled back a bit. Broad bond index up by 0.5%. Long bond up 1.1%. You're going to see the yield pulled back by 1.24%, and the 10-year yield pulled back 1.6%. That's it for our interasset correlation charts. Let's go to the tail of the tape. Some news: rate cut odds now only 46% by the end of July FOMC meeting. Things just economically not going in the direction that the Fed wants them to, as inflation has been stubborn and the economy a bit stronger, and employment stronger too. They want to see this weakening before they start cutting rates. Day count, 4th day down. 4th day below the 8-day moving average, 4th day below the 21-day moving average. And it's been a pretty tough 4 days. When the market decides that it wants to do something, don't argue with it. There's the quick and the dead, as I believe William O'Neill was, that's one of his sayings. He's got plenty of them. Sectors, GDX up, oils were up, but not by the end of the day. Let's get that out of this column. KRE banks held on. XLF, P, and U. Add in XLB to the positive sectors on the day. To the downside, GLD, XLK, big time. Semiconductors and IBIT, that's Bitcoin. Semiconductors, ASML reported before the open and had an all-around bad report, and that set the tone for semiconductor equipment manufacturing companies and the overall sector itself, as SOX was down over 3%. Let's show that chart very quickly. Here's the SOX breaking well below the 50-day moving average now, and the slope of the 21 has rolled over as well. Let's look at ASML, former leader, as it was putting in a nice flat base. This is why we don't buy prematurely. Reported earnings down at 7.1% on the day. Not good. Tomorrow before the opening, Taiwan Semiconductor reports, and that will be widely watched as well. All right. What's next? Back to the tail of the tape. So what we do in-house, I mentioned SMCI very strong yesterday and took a very small starter position in this. Uh, Mentioned that our beta ceiling is a 0.5. And today we locked in the gains on SPXL. This is the 3 times leveraged S&P 500, because when the trend changes from up to down, this is when you can lose the leverage very quickly to the downside. So we locked that 50% gain in from the entry on 11/1 and the follow through day, or 11/2 actually, and we move that to an equal weight S&P 500. We've got different rules in house for how much exposure we want to have to the broad index, depending on where we are. And we booked that, moved it into SPLG. Never SPY. You're never going to see us own SPY here, because SPY, uh, they hold your dividend for 5 weeks after they declare it 4 times a year. So the heck with that. There are 3 other options that are very low priced and work just as well. That's IVV, VOO, and SPLG. We picked SPLG because it's lower priced. We can get a more accurate weighting for for the smaller accounts that we put it in. So this reduced our beta from a half down a little bit to 0.47. Bottom line on the day, gap up failed again, and leaders underperformed. I do want to note SPXL. We didn't sell this for big taxable accounts. No reason to take the taxes. We can easily offset it with SPXS. So while if SPXL continues going down, SPXS will offset that, so we won't have to pay the taxes on it, and just move the exposure over to SPLG. It's in times of volatility that these ETFs can cause a problem with decay. So we avoid them during chop and volatility and or sideways movement. You really want the wind to be at your back when you're in those leveraged products. All right, so let's get to the tail of not the tail of the tape, that is the tail of the tape. Let's get to the 21 over 21 list and see how it did today. And quite a few of these will be coming off the list by the end of the week. If things continue as they are, this is sorted by order of worst performance today to best performance. And we'll start off with DraftKings, and that's an ugly bar and a break of not only the 21, but the 50-day moving average as well. Next up, Micron. Sold it yesterday, outside negative reversal, closing below the 21-day moving average. NVIDIA, our last holding besides the SMCI that we added today, so the last remainder of from the rally, sitting on its 50-day moving average. Wingstop sitting on its 21. Datadog broke the 21, down 2.7% on the day. APP breaking the 21. Dexcom breaking the 21. Pure Storage sitting on the 21. Astera Labs hasn't even traded for 21 days yet. SMCI, big negative reversal sitting on the intersection of the 21 and 50-day moving average. Spotify holding up nicely, down 1.5% on the day. Amazon breaking the 21. Schwab, a little bit of a pullback after 2 nice up days after earnings. CEG bounced at the 21. GoDaddy sitting on the 21. VRT bounced at the 21. RTX, that's Raytheon, nowhere near the 21, just going sideways, as this has really outperformed over the last 5 weeks. CCJ just down barely on the day. Coupang, another up day, 4 straight up day after they raised their rates or their fees that they charge to consumers. FCX closed at the bottom of the range, but still positive on the day. First Solar, something about Chinese tariffs sparked this up higher today. It gave back a bit of it, but still positive on the day and holding the 21. Good volume patterns here. The 4-day pullback below the 5-day move higher. And that's it. That was the best on the day. That's your 21 over 21 list. Not the best day for the 21 over 21 list, but that tells us what we need to know about leading stocks. 17 out of the 21 down on the day, an average of 1.45%. So here's the comparison chart between us and traditional advisors. As William O'Neill said, anybody can get you in. Who's going to get you out? We've detailed how we've gotten more defensive here, laid out our rules for getting more defensive. And as always, you have any questions, put them in the Q&A, put them in the comments in YouTube, or email me, don@revereasset.com. If you're interested in becoming a client, my partner Dan Stewart is at dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the market, it's how much of that you can keep. And the type of market that you're in is important. We've gone from bull to market here, moderate outperformance. That's what we saw during this rally that started on 11-1, 11-2. And now we're in between bull market pullback and mild correction here. I believe we eclipsed -4% down from the top on the S&P 500 today. So we should expect inline performance here while the market decides what it wants to do. We've got a little bit of exposure still on. That 0.5 is the ceiling, as I mentioned, but these are the various market conditions and what our expectations for our approach should be during the various market conditions. So you can see we're prepared for anything, unlike these guys that just sit there and tell you to handle the drawdown and with a smile on your face. But it's okay. You might get a pep talk and a desk calendar. And that's it. That's going to wrap it. Our flagship portfolio, GROTECTION, designed to manage, participate in uptrends, grow your portfolio, protect during weak markets or downtrends, quite a bit away from this 200-day moving average where things can really get bad. But up next, right now, we're stuck right between the 50-day and the 100-day moving average. This is kind of the no man's land. Very often, we will bounce at this, the indexes will bounce at this 100-day moving average. It's a very normal spot for a bounce to pull back. You can see during this uptrend here, several tails right down, touch the 20-week. That's the 100-day. Sometimes we bounce around it for a little bit, but you can see on the weekly chart, we are closer to it, just 1.1% away on it, and we'll manage against those two levels. That's going to wrap it for Wednesday, April 17th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening, and have a great day.